StablR's euro and US dollar stablecoins have depegged as an ongoing exploit, targets the project's minting multisignature account. A compromised private key in a 1 of 3 threshold allowed an attacker to mint 8.35 million USDR and 4.5 million EURR, draining roughly $2.8 million from the system. The attacker then swapped these newly minted tokens for ETH on decentralized exchanges, where thin liquidity allowed the extraction of around 1,115 ETH. This breach highlights a governance and key management failure rather than a flaw in the smart contract itself. The depegging has caused USDR to fall to about 70 cents and EURR to about 88 cents, signaling a loss of confidence and liquidity in the project. The incident is part of a broader trend in May 2026, where DeFi Llama has tracked more than a dozen major exploits, including attacks on Thorchain, the Varus Bridge, Echo Protocol, and Polymarket. These breaches suggest a growing pattern of vulnerabilities tied to private key and governance weaknesses across the DeFi ecosystem. The StablR exploit was traced back to a compromised private key within the minting multisignature account. The attacker added themselves to the account, replaced the other owners, and minted large quantities of stablecoins. This breach. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Was enabled by a weak 1 of 3 threshold, which failed to provide sufficient protection against unauthorized minting. The attacker then converted the stablecoins into ETH, leveraging the lack of liquidity in the market to extract value. The attack did not involve a flaw in the smart contract itself, but rather in the key management and governance structure of the project. This distinction is important because it suggests that the issue is not technical but procedural, and that similar vulnerabilities could exist elsewhere in the DeFi space. The broader DeFi landscape has seen several high-profile exploits in recent weeks, including attacks on Thorchain, the Varus Bridge, Echo Protocol, and Polymarket. These incidents have underscored the variety of attack vectors that DeFi projects face, from governance failures to private key compromises. The StablR incident adds to this list, reinforcing the need for stronger key management and more robust governance structures in the DeFi space. The depegging of StablR's stablecoins has immediate consequences for holders and traders. With USDR and EURR trading well below their intended pegs, users who rely on these tokens for stable value or as part of DeFi strategies are now exposed to volatility. This could lead to a cascade of liquidations or losses in leveraged positions. The breach also raises questions about the long-term viability of StablR as a stablecoin issuer. If the project fails to restore the peg or regain user confidence, it could face a loss of market share and a decline in adoption. The broader DeFi sector is also watching closely, as this incident could serve as a warning about the risks of relying on weak governance structures and insufficient key management. The next signal to watch is whether StablR can successfully address the breach and restore the peg of. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. It's stablecoins. This will require a coordinated response from the project's team, including steps to secure the minting multisignature account and rebuild trust with users. The response will likely include a detailed post-mortem of the attack and a plan to strengthen key management and governance protocols. Investors and builders should also monitor whether other DeFi projects with similar governance structures are at risk of similar exploits. The DeFi Llama tracking of exploits in May 2026 suggests that this is not an isolated incident, but part of a broader trend that could continue unless more robust security practices are adopted.